So there has been a lot happening in the stock market recently. We got you covered today. We are going to look at companies' fourth quarter earnings and their 2025 outlook. And what does the European debt crisis, COVID-19, and the Fed's aggressive rate hike cycle have in common? We'll tell you. Let's dive into it. So about 70% of companies in the S&P 500 have reported their fourth quarter earnings so far. We've heard from companies from a variety of industries. And I must say, this has been one of the most upbeat quarterly outlooks that we've seen in many years. When we came into this quarterly reporting time, January 1st, for the fourth quarter, companies were expected to have profit growth of 12%. Well, we've heard from 70% of the companies, and as of right now, companies are on track to report growth of almost 17%. You can see there on the top right, under blend of actuals and estimates, 16.8% in the S&P 500. And it's impressive because if you go down there, notice near the bottom on the right, energy is a minus 27% profits for the quarter. So if you take that out, this number is even higher. And this is a positive. The energy companies are having lower profits because that means cost of energy has gone down. Profits have gone down. Gasoline, if you drive, you've seen that. This is good news, and it's even better if you listen to companies and their outlook for 2025. We have heard from companies under the financial sector, JP Morgan and Wells Fargo, Bank of America, very good outlooks. Visa, MasterCard, and American Express. Listen, we talk a lot about these companies. We listen to hear what they have to say about what the outlook they're seeing for the consumer, because all three of those see our spending, and they all are very upbeat and optimistic, say the consumer is very, very strong. We've heard from tech companies like Meta, formerly Facebook, Palantir, and Netflix. All had blowout profits, great quarters that we heard from. In the travel sector, and there's probably not been a more optimistic group than the travel names, Delta, Royal Caribbean, Expedia, and Uber all had fantastic reports. Delta said 2025 is going to be our best year on record, and we've heard that from a lot of the travel names. Under healthcare, Abbott Labs and Eli Lilly, very, very strong reports. In the industrial space, we've gotten 3M, Rockwell Automation, and GE. Under the brand section, Coke and Starbucks, and then in the wireless section, T-Mobile and AT&T. Listen, we have heard this time and time again. There have been some companies dropped in that have disappointed, but when you take a look at the overall breakdown, 12% profit growth expected coming into the quarter, up to almost 17% now. That is very good news. Now, our next chart I like a lot because it breaks down company earnings between the Mag 7, the big tech names, Amazon, Apple, Nvidia, Tesla, etc., and the other 493 companies in the S&P 500. What you'll notice, if you go back to 2023, you had profit growth of 36% in the Mag 7. The 493, you had a decline in earnings of 4%. Then 2024, we have a few left to report, but this is going to be pretty close to the final. 36% growth again in the Mag 7, which is why they had another terrific year, the stocks in 2024. Only 3% growth in earnings for the rest. But for 2025, look, the gap narrows. 16% profit growth expected for the Mag 7, 9% for the rest of the markets. And then 2026, we're a ways away, but 17 and 13. This is a big story in the markets. If the other 493 can have double-digit earnings growth in 25 and 26, that can really power the stocks of those companies. And if you're the Mag 7, if you're able to produce, between 15 and 20% growth, that's good news for them as well. But we like to see 23, 24, the market was really propelled by the big 7 tech names. may not be that way in the next couple of years, and that is good news. The last chart I want to put on this topic about earnings reports is, y'all know that the last few years inflation has been one of the most important topics in the markets. And look, consumers are paying far more for goods and services today than they were 4 or 5 years ago. Nobody likes doing that. But this chart looks at how many companies are talking about inflation in their earnings calls. And you will notice that right now, and if you can go back and look in 21 and 22 and early 23, this had rapidly gone up. Almost every company was mentioning it. We are now on track for the fewest mentions of inflation since 2020. And here's why this is important. If companies are dealing with inflation in their businesses, they are going to raise prices. In this case, we are hearing from company after company when they are saying, hey, right now, we are not seeing the same kind of inflation that we have in the past. We're not having to talk about it, which is good news for consumers that there may not be many price hikes on the way in 2025. So what do the European debt crisis, COVID-19, and the Fed's aggressive rate hike cycle have in common? Well, they are 3 occasions of the 26 occasions that the stock market has had a decline of 5% or more since the year 2009. And listen, there always is a reason during one of these sell-offs why investors are told, hey, you want to get out of the stock market, or the outlook for the market is not positive. So we thought we'd put this chart up, and let me tell you that there is a lot happening here. Don't try to read all of these. It's going to be difficult to do. But just to highlight here that there have been a lot of occasions the stock market is sold off. I went and counted 13 of these occasions. So half the time, the stock market was 9% or more. 5% sell-off, probably not going to notice very much. But once you get up close to 10% or more, that is notable. And so all kinds of different reasons over the years for these sell-offs. Each one was met with wailing of gnashing of teeth and concerns over how far the market could drop. The biggest of these declines was in 2020, the COVID sell-off, where the market dropped over 35% in just 4 weeks. That was a great buying opportunity for us. And most of the time, these are great buying opportunities. And that's the key takeaway here, is that there always are going to be concerns. We've seen just in the last 2 years, 4 different sell-offs of between 7 and 12%. And each one had real reasons for the declines. Many times it was, hey, a recession could be imminent. And if someone had gotten out and sold during those declines, that was a very big mistake. The last 2 years have been very good for the stock market. So it's just important that you understand the next time there is a sell-off, hey, this has happened 26 different occasions since 2009, and yet over that time period, this stock market is up over 500%. Now, the addendum to that is taking a look at some individual companies. We're going to look at the Mag 7 over the last 10 years and seeing how far they have fallen, and yet look at what their growth has been over that time frame. This is a stunner, okay? So we talked about the S&P 500, and this is over the last 10 years. It declined almost 35% in 2020, yet in that 10-year period, it's up 260%. But let's take a look at the biggest tech winners, because this is shocking. Let's start with Google. Their largest decline was 44%. That stock is up 660%. Apple was down 39%. Gains of over 800%. And you go down from there. Meta was down 77%. Look, that is a massive decline. It, over that time, though, is up over 800%. You go all the way down, look at Microsoft, Amazon, Netflix, Tesla, same kind of story. And then NVIDIA at the bottom, a 66% decline, yet it's up over 25,000%. Listen, here is the takeaway. These are some of the biggest winners in the market over the last 10 years, and yet each of them had a significant sell-off at some point during that period that you had to decide, what are you going to do with that name? And this is why portfolio construction is so important. And when we're building portfolios, it's okay, and in fact, it's good to have a few positions in the portfolio that have higher volatility, where it could have a bigger sell-off if you have bought companies that have great growth ahead, because you can have tremendous gains. And we have our share of companies in client portfolios that have had significant gains over the last 10 years. But you don't want too many of them in there, because if you have that, too much of the portfolio can drop 40, 50, 60, 70%, and that can disrupt your financial plan. So portfolio construction is very important as it relates to the stock market. Now, speaking of portfolio construction, if you are not a client of Sentara Capital, we would love for you to give us a call. Listen, if you are trying to decide, hey, is my portfolio in the right place? Is the construction solid? We can help with that. We will do an X-ray analysis. And listen, we've been doing this a long time. We've seen a lot of statements from clients, and we can tell you that many people are not where they should be, and their long-term goals are not met as a result of that. We can take care of that. Give us a call. So to summarize, we have heard from over 70% of the companies in S&P 500, and they are very optimistic. Profit growth coming into the quarter was expected to be 12%. Now it's nearly 17%. And there is a lot of confidence about what 2025 will bring. As for the 30% of the companies that are still to report, we will be listening and will report back on anything important that you need to know, which is a good reason for you to like and subscribe if you're not already. We also talked about the fact that 5%, 10%, 15% sell-offs or more happen. It's part of the market. They're not a reason to sell and get out. If you had done that in the past, it was a big mistake. We're here to construct your portfolio so that you can handle when these sell-offs take place. Thanks for watching, and take care.